Hey, welcome again to the FinFlow podcast. Today, our topic is gold versus Bitcoin, the ultimate wealth showdown.
Hi there. Yeah, it's a big one. Gold or Bitcoin, the old guard versus the digital challenger.
Exactly. It's a question lots of people are wrestling with, right? Thinking about protecting their wealth, especially now. Where do you put your trust? Is it the shiny stuff we've valued for millennia?
Or this newer digital thing that's causing such a stir.
Precisely. And today we're doing a deep dive based on some really interesting analysis comparing them head to head.
Looking at the core tension, really, that age-old desire for security versus the lure of potentially massive growth in this new digital age.
Yeah. And we want to get beyond just the headlines. We're talking stability, growth potential, scarcity. How real is it for both?
Portability, too, which is a huge difference, and how they stack up against inflation. What about the risks?
Definitely the risks. So let's maybe kick things off with gold, the original store of value.
Sounds good. I mean, gold's history is just incredible, isn't it? We're talking thousands of years. Ancient civilizations, empires, central banks today, they all trust it.
It's tangible. You can hold it. It doesn't need Wi-Fi or electricity to exist, which feels solid.
That's a key point, that physical reality. And its scarcity is natural. You have to dig it out of the ground. It exists independently of any tech.
And it has this reputation, doesn't it, for stability, especially when markets get choppy or there's an economic crisis.
Historically, yeah. When stocks go down, gold often holds its own, sometimes even goes up. It's seen as that safe haven.
Its growth might not be, explosive like some other things.
Definitely not Bitcoin level growth, generally speaking.
Yeah.
But it's often seen as steady, consistent over the really long term, preserving wealth rather than rapidly multiplying it, perhaps.
And the inflation thing. People always talk about gold as an inflation hedge.
And there's a long track record there. I mean, centuries, millennia even, where it's generally held its purchasing power against devaluing currencies. That history gives it a lot of weight.
Plus, everyone knows what it is, right? Anywhere in the world.
Universal recognition. Governments, banks, individuals, gold is gold. That acceptance underpins its value.
But it's not easy to move around, is it, if you have a lot of it?
That's the flip side. Portability is a real challenge for large amounts. You need security, maybe armored transport, paperwork. It gets complicated and expensive.
So lower risk, maybe, because it's so established, but logistical headaches.
That's a fair summary. It's the tried and tested, low-risk option in many ways.
Okay, so that's gold. Now let's shift gears to the disruptor, Bitcoin.
Right, Bitcoin, born out of the 2008 financial crisis, which is kind of telling.
Yeah, the idea was decentralized money, wasn't it?
Yeah.
Away from the banks and governments.
Exactly, independent of the traditional system. And its rise has been, well, meteoric. People started calling it digital gold.
That comparison comes up all the time. Is it the future? Is it replacing gold?
That's the big debate. But what's undeniable is the attention it's grabbed and the potential some see in it.
Okay, but let's talk volatility. Because, wow, gold is steady, Bitcoin, not so much.
Not so much as an understatement. The price swings can be huge, significant percentages up or down, sometimes in a single day. It's a very different beast compared to gold's relative calm.
But that volatility comes with the potential for massive growth, right?
And
That's the lure.
Absolutely the draw for many. Early adopters saw incredible returns, life-changing gains in some cases. So yes, high risk, but also the potential for exponential upside that gold typically doesn't offer.
Now, scarcity. Gold is scarce because it's hard to find. Bitcoin scarcity is different.
It's programmed. There will only ever be 21 million Bitcoin, period. That's written into the code.
So some argue it's more scarce than gold because the supply is absolutely fixed.
That's the argument, yes.
No.
Gold mining continues. The total supply increases slowly, but Bitcoin supply is finite and predictable. For proponents, that digital absolute scarcity is a very powerful feature, especially against inflation.
And portability. We mentioned gold's issues.
Yeah.
Bitcoin.
Completely different story. You can, in theory, hold millions of dollars worth of Bitcoin accessible via a password or a private key.
And send it anywhere in the world pretty quickly.
Yeah, with an internet connection. Across borders, relatively easily compared to moving physical gold bars. That digital ease of transfer is a massive advantage in today's world.
Okay, what about Bitcoin as that inflation hedge? Does it work like gold is supposed to?
Well, the theory is their limited supply should protect against currency devaluation, but the track record is much, much shorter than gold's.
Right. It hasn't really been tested through multiple full economic cycles, has it?
Exactly. We've seen it correlate with risk assets sometimes, behave unexpectedly other times. So the jury's still out on whether it consistently behaves as an inflation hedge over the long term. The data is still limited compared to gold's centuries.
And risks. Gold's risks are kind of known. Storage, theft. Bitcoins are different.
Very different. You've got regulatory risks. Governments are still figuring out how to handle it, and rules could change dramatically.
Hacking. Losing your keys.
Major risks. If your exchange gets hacked or you lose your private keys, your Bitcoin could be gone forever. Plus, there are technological risks, bugs in the code, the challenge of scaling the network, reliance on the internet and electricity.
And just the overall risk of adoption. Will it truly become mainstream or remain niche?
That's another big question mark. Its future isn't guaranteed in the same way gold's role seems to be, so definitely higher risk overall.
So listening to all this, it really doesn't sound like there's a simple winner here.
Not at all. It truly depends on you, the individual. What are your goals? What's your tolerance for risk? How long are you planning to invest?
Are you trying to just protect what you have, keep it safe and steady? Or are you looking for potentially higher growth, even if it means a much bumpier ride?
Those are the fundamental questions. Preserve wealth or seek significant growth, stability or upside potential.
So summing it up, gold stable, tangible, trusted for ages, globally recognized, but maybe slower growth and harder to move.
Right. And Bitcoin potential for high growth, digitally scarce, super portable, but much more volatile, and carries newer, less understood risks.
Both claim to offer some protection against inflation, though gold has the longer proof.
Correct. Bitcoin's portability is unmatched, while gold's stability is its historical trump card.
Which leads to the idea that maybe you don't have to choose just one.
That's often where sensible thinking lands. For many people, a combination might be the smartest play. Diversification.
Using each for its strengths, balancing gold security with Bitcoin's growth potential in a wider portfolio.
Exactly. It allows you to potentially capture some upside while still having that bedrock of stability. It's about finding a balance that works for your specific financial picture and comfort level.
That makes a lot of sense. So for you listening, maybe the question isn't which one, but how might both traditional and digital assets fit into your own strategy? Reflect on your goals, your appetite for risk. It's definitely food for thought.
Absolutely. It's about understanding these tools and using them wisely for your future.
Great stuff. Thanks for that breakdown. And for everyone listening, like, subscribe, and share the podcast, and follow for more. Seki.